everyone, welcome. Let's kickstart the show then and let's bring our guest on board who's Sonam Udasi, Senior Fund Manager of Equities at Tata Mutual Fund. Let's understand a little bit more about the fund he manages, and that is Tata India Consumer Fund. Hi Sonam, thanks so much for joining us on the show today. Let's get started and help us understand a little bit more about the fund you manage in terms of the sectors you have weightage in and what's the fund looking like as of now.
The Tata India Consumer Fund, based on the mandate that we have, we can take exposure in the staples, the consumer staples, discretionary, the retail companies, some bit of textile, even media companies, as well as auto and auto hands. This is the sort of the universe. Uh, Apart from that, there is we have taken permission from SEBI to take a 20% deviation if we want to. So currently, from a sector exposure point of view, uh, we have an overweight position on the consumer services segment. We are slightly underweight on the consumer staples. We have a fair bit of exposure to the PLI, theme. Also, we are underweight on auto segment from a weight perspective, but overweight on more discretionary and food services and the liquor segment. I think that's the breakup for us.
All right, Sonam, thanks so much for taking us through the breakup of your fund, but also tell us what kind of risk profile is your fund shaping up to have.
So I think it's a thematic fund, and like all thematic funds, the risk profile is high. That being said, because it's the consumer segment and India is largely a consumer economy, though we are trying to change that, the ability for you to generate decent returns and better than market returns are evident by historical, data points that we have, both on the fund and on the sector.
All right, and also tell us a bit more about the consumption space in India in general. Now, this sector has seen some sluggishness post the surge that we did see coming during the COVID pandemic. Now, do you believe the sector is headed for consistent growth? What's your view on rural recovery as well?
So first and foremost, I would like to say that Indian consumer segment as such has never been in a slowdown over the last 10 years. Only thing is that as years progress, the consumption pattern changes. For example, last 2 years, consumption continued to happen robustly on food processing, agro processed foods. In fact, on the data that Statistical Institute brought out, it was very evident that even rural economy was spending more on food. So I think the consumption pattern changes depends on the penetration. To my mind, a lot of penetration has already happened on, say, the segments like detergents, some bit of personal care, etc. There is low penetration on segments like appliances, low penetration in food processing, and that's where the higher growth potential will continue to happen. That's true even for liquor industry. So these patterns keep changing. If there was a slowdown, there was no way this thematic fund could have, outperformed the benchmarks, the broader benchmarks as well. So I think that segments keeps changing. The beauty of this theme is that it's more secular, and there are more names and themes that you can keep rotating in and out from. Um, Over the next say 5-10 years, this because India is going on a capex spree, uh, per capita incomes will continue to go up, and the way that you consume will keep changing, and the fund will need to adapt to that. And that's where I think the so-called alpha would get generated from.
All right, point taken. But let's talk a little bit more about numbers and help us understand what kind of returns has your fund been generating for investors?
So the fund, since its inception, the fund has been able to generate a CAGR of 19% plus. In the last 5 years as well, the CAGR is 19% plus. Last 1 year is 40% plus. I think that's the kind of So there are phases where it goes through a slowdown. You talked about, say, for example, in your previous question on the rural slowdown. There are segments where there is slowdown, but where penetration is quite high, broad masses also want to downtrade or try something else. There is tremendous consumption happening in the rural segments on data, on services, on getting delivery done, on getting food. There's a lot of growth potential across India on the liquor segment. And as people get, more money, they want to, take time out, and their forms of consumption keep changing. So I suspect over the next 10 years, the bigger delta will come from as more women join the workforce. Anything that makes their life easier, any sort of consumption will be a theme to bet on. Whether it's ready to eat, whether it's consumer appliances, anything to do with that segment will, allow you to do better. PLI is another theme that could work well over the next 2, 3 years, considering the government's focus on manufacturing and PLI.
All right, well, that's a fair point. And would you describe your style of fund management as value oriented or growth oriented? What's your pick here?
To my mind, both is in hindsight. Whether you are a value or a growth investors, I suspect that because this theme is oriented on the lifestyle and consumption habits, it will be more growth oriented. It will force you to look at what is the growth potential. I believe every equity investor, whatever scheme that they're investing in, they are looking for growth. And if you can find growth at some value, that's where your nirvana is as an investor.
All right, well, Nirvana, definitely, but also take us through some fundamentals that you stick by when you make decisions regarding your portfolio. What are some non negotiables that you have? Take us through the thought process that is in place when you take entry or exit decisions when it comes to your portfolio.
So I think the one thing that I always look at and we always try to process within our team is that what is the potential of a particular segment, and how big the legs are for this, what big tailwind is, and if we can find that. Uh, the being in this theme, you have to have high quality sort of focus in whatever you do, because it's a consumption theme. It comes at a high valuation. It will not be cheap relative to the broader market, and there is a quality of earnings trajectory that the business has to bring in, and how big is the brand or the sort of connect with the consumer, and how big it can get as a theme. These are a few things that we continue to look at. And whether what kind of corporate governance, what kind of directors that they have on board, that's also a thing that we would softer aspect that we'll focus on. What we will try and avoid is that if we might like a theme and we want to go there. For example, I talked about, say, food or liquor. Sure, we will look at that and we'll go for that. But at the end of the day, we want some ROE profile to come into that business. It cannot be a promise that at some point. Uh, there are things like, for example, we have recently taken a large exposure in a consumer service franchise. It's more to do with, the way people are eating out and the way people want to order. But it's still is not profitable. But looking at the total addressable market of that segment, we feel excited. And your dominance in the marketplace, that's what determines for us where we want to go. If you cannot make a mark in your market share, if you're losing market share, that's sort of a red line for us.
All right, well, thanks so much for explaining that to us in such great detail. But I have one last question for you. And we've been seeing the premiumization trend play out across the consumption space. So, help us understand how you are factoring this phenomenon into your portfolio. Has it led to any changes to your portfolio?
So you're absolutely right that whether it's rural India or urban India, everybody is aspirational, everybody is upgrading themselves. So I think the scheme that we are talking about, uh, plays on that lifestyle, aspirational category. So we have a fair bit of exposure to the liquor industry. We have a fair bit of exposure to the jewelry, gems, the lifestyle segment. Uh, a decent exposure to how a fast fashion youth is, taking what kind of growth that can bring in. We have a decent exposure to that as well. We also have, as I talked about, on the eating out phenomena, uh, and how people are aspirationally, the the trend of eating out is started to increase. And what can we do to play that as a lifestyle segment? We have exposure there as well. Food processing, names I talked about. Snacking, we have a fair exposure there as well. I think we are playing that lifestyle aspirational change to the fullest possible, and we are making changes as things evolve, because customer is also evolving, and we need to be, cognizant of that trend and change our, strategy accordingly.
Right, Sonam, thanks so much for taking the time out and joining us on the Money Show today and helping our viewers understand the entire consumption space as well as the Tata Consumption Mutual Fund portfolio as well. Thanks so much for taking.
If you like this video, then like, share and subscribe to ET Now.